Hello, Vix Trader here again, and I thought I'd explain to you some of my indicators that I use up here, mainly three of them, the MMX, my January indicator, the SPX 6 p.m. indicator, and the primary candle indicator, and what they mean and how I use them, and they work, and I thought I'd show you why I do it. The very first one is the most important one, is the monthly January high indicator. For each year, the month of January has a high and a low. A high and a low. This last year is 217, a high and a low. And the markets are driven by computers. 80% of trading is all computers. They have no emotions. They use pivots. And these are some of the pivots they use as investing. Investing whether to buy or sell. We are right now at a precipice right now today where the market, the low, this January indicator was 267.40. That was the January low of 2018. And if it goes below that, the market generally goes below for significantly, another 5–10%. And if it stays above and it holds, it'll stay within the range. And right now we're about to go below it. So if the market goes below it and holds below and stays below, it can go all the way down to $240 on the spiders, which is 2,400 on the S&P. But we'll see if that transpires. But throughout the past 10 years, 12 years, 2007, you see like last year, here's a January candle. It held above that high and rallied higher. 2016, here's the January candle. It held the low of that candle, the monthly January, in the month of February, rallied back up to the high of the 2016 candle, January candle, and rallied. And you see 2015, it generally went sideways, but generally stayed within that range of the high and the low of the month of January. And then this year, 2014, did the same thing, held the high and went even higher. So holding that high, the January candle, is very important for rallies. At the very least, it needs to hold the low if the market goes down, retraces, as they say. If it goes below it, it can go significantly lower. If you look at 2007, the market held that high as the Fed was raising rates, and the market was rallying. It generally went sideways for the whole year, but it stayed above that high and finished the year above that high. 2008, it plunged, and it held the low of the January for most of the months until August, and then September it was holding it too until the Lehman news came out on September 8th that it was going to go bankrupt, and you see it went right below that January low and it plunged. The market plunged 60% from the high to the low of $80 in the S&P. Then in 2009, the month came, January, it held that candle, stayed within that range really until the Fed announced quantitative easing in March, and you see it went above that January candle's high, of about $90, and it rallied. So these monthly candles are very important, and they're a big pivot for investors, and computers use these whether to sell or buy, whether they go long or short. So that I use as well. We're at 267.40 right now in the pre-market, and in fact stays below that, the market can go down further significantly. Who knows how low? Could be 2,400 or further, or maybe somewhere in between. The low for this year is 255. So I'm guessing that if it closes below the 267 area, it can go to a low as 255. And the TVIX could spike to about $80, $90. Who knows? I also use the same thing in my S&P futures. Every day at 6 p.m. of the previous day, you'll see over here, for example, for today, at 6 p.m. Monday night, the high was 226.91, the low was 26.91, the high was 26.97. And it's the same thing. If it stays below this today, then the market's probably, which already is at 269.85, it's going to go a lot lower. As we see yesterday, Sunday night, the range was right here, 27.29, 27.34, and as soon as it went below that, yesterday it went down significantly. On the Friday rally, this was the Thursday, 27.24, 27.31 was the area at 6 p.m. for Thursday night. So going into Friday, overnight here, midnight, 3 a.m., 4, it went down a lot, but then it rallied. So, the TVIX around 2, 3 a.m., was probably up significantly if it had traded overnight, but it doesn't. But say at 4 a.m., that thing was up significantly. But as you see it rallied, then the news came out from President Trump about trade with China going well. You see it rallied. And why did I short the TVIX? Because I was confident that, it's above this futures price of 27.32 area, that it held it, it's going to rally into the close. and this is the Sunday night. As you see, it dropped. So really, the first candle of the monthly is very important. January candle. In the futures, the first candle is the 6 p.m. candle of the night before. So for Monday's trade, it'll be Sunday night, 6 p.m. For Tuesday trade, it'll be Monday night, 6 p.m. You know, for Monday, it will be Sunday night, 6 p.m. If I said that right. So I look at that. Those are my indicators. It's a holding the monthly candle, the monthly low. It's a holding the 6 p.m. candle low. You know, that can give you a clue if it's going to go higher or lower. The arrows are right here of that low at 6 p.m. As you see for each night, the previous night. Then when the market opens, it's the same thing. The first 15-minute candle tells me a lot. This was yesterday. I said, you know, we discussed in a previous video that I was going to see it's got this uptrend. It's probably going to break, it looks like, because the pre-market was down. Will it hold the 3-day moving average, the yellow, and the 5-day moving average? I had a clue it wasn't going to because it went below the first 15-minute candle, the 9:30 to 9:45 candle, which is right here with the green arrow. It broke below it and it broke trend, so it's probably going to go below that, and that's what it did. And you see on Friday, the market opened down from Thursday night, and here's the range of that first candle, the first 15 minutes. It stayed above it, then the news came out about China trade. You know, it rallied, came back down to close to the top of that candle. That's where I shorted TVIX at $44, and then rallied into the close. So I was looking for a pivot. Hey, what price should I short the TVIX on a bullish day? It'll be the top, somewhere around the top of this spider's primary candle, the first 15 minutes of the day. You know, on Thursday, we saw a gap down, you know, and all the way down, and it held this low, and it went sideways, but as soon as it went above the top of the first candle of the day, the 9:45 candle, it rallied. So these are significant. And on Wednesday was the opposite. It went below it, stayed below it, and just kept going down. You know, and it found resistance again at the 3-day moving average. And I showed in an earlier video that in uptrends, the 3 and the 5-day become support. In downtrend, the 3-day and the 5-day become resistance. So those are some clues to my indicators that I use. You know, the monthly, you know, the futures 6 o'clock one, and the first 15 minutes of the day. That tells me how the day is probably going to pan out. Whether it's going to go lower, higher, just based on this first candle of the day, the 9:45 candle. You know, so these are not things to just, you know, to dismiss. They're important. The computers go by, as you see, historically, at this range, stayed above this particular year, stayed above the January high and just rallied. So if you want to rally, it's the great time to invest if you want is to figure out the month of February. If it stays above, the market will rally as long as it stays above the January high. And if it goes below the January low, like it did here, it's probably going to go a lot lower. You know, over here, you saw another time here in 2011. You know, there was a thing called the taper tantrum in August where the Fed said they were going to taper the quantitative easing. You see it went below the January candle and went lower. Fix trader here. Thank you very much. Signing off. I'll put another video up about yesterday's trade. Bye-bye.